Imagine waking up one morning in 2026, grabbing your phone to check your bank account, realizing that everything you saved over the last 5 years now buys you half of what it used to. Sounds terrifying, right? But here is the truth that no one on mainstream news will tell you. The financial system is walking on a tightrope, and 2026 is shaping up to be the year that rope finally snaps. Inflation, currency devaluation, and a debt crisis have been swept under the rug. For decades are all converging at the same time, and in the middle of this storm, two assets stand tall: gold and silver. But the question that keeps investors up at night is simple yet brutal. Which one will actually save your savings? Before we dive into that, if you want to protect your wealth and stay ahead of the game, hit that like button right now and subscribe to Shadow Wealth. Because what I am about to share with you is not financial entertainment. This is a roadmap to survival in a system designed to drain you dry. And trust me, by the time we are done, you will look at gold, silver, and your entire savings strategy in a completely different light. Let me start with a story that most people have already forgotten. Back in 1971, President Nixon took the United States off the gold standard. At that moment, the dollar became nothing more than a promise printed on paper. And what happened next? Gold went from $35 an ounce to nearly $800 by 1980. Silver, which was trading around $1.50, exploded to almost $50 an ounce. The people who held physical metals didn't just survive that decade. They became wealthy beyond their wildest dreams. Fast forward to today, and history is repeating itself, but with even more dangerous twists. The national debt has crossed $34 trillion. The money supply has been inflated by nearly 40% in just the last 4 years. And central banks around the world are buying gold at a pace never seen before. In 2024 and 2025, China, Russia, India, and even smaller nations like Poland and Turkey have been stacking gold like there is no tomorrow. But here is what they are not telling you. While gold gets all the headlines, silver is quietly setting up for what could be the most explosive move in modern history. Now let me break this down in a way that makes sense for your savings. Think of gold as the fortress. It is solid, reliable, and has protected wealth for 5,000 years. Every single empire that tried to move away from gold eventually collapsed. The Romans diluted their currency with less and less silver until their money became worthless. The Weimar Republic printed so much paper that people needed wheelbarrows to buy bread. Zimbabwe, Venezuela, and more recently Turkey and Argentina have all learned the same painful lesson. When governments lose control of their finances, gold becomes the only money that no government can print. But silver is different. Silver is both a monetary metal and an industrial metal. It is used in solar panels, electric vehicles, medical devices, and every single smartphone on the planet. In 2026, as the world pushes harder into green energy and artificial intelligence, silver demand is going to hit levels that the mining industry simply cannot keep up with. For the last 4 years, we have seen a supply deficit in silver. That means more silver is being consumed by industry than is being mined. And that deficit is getting bigger. Every single year, at some point the price has to adjust, and when it does, the move will be violent. But let me pause here because this is where most investors make a fatal mistake. They treat gold and silver as if they are the same. They are not. Gold is wealth preservation. Silver is wealth multiplication. If you want to protect your savings from a slow, steady devaluation, gold is your best friend. But if you want to actually grow your savings during a monetary crisis, silver has historically outperformed gold by a wide margin. In the 1970s, gold went up about 23 times. Silver went up over 35 times. In 2008, after the housing crash, gold eventually went up about 4 times from its low. Silver went up nearly 7 times. In 2020, during the COVID panic, gold hit new highs. But silver went from $12 to nearly $30 in just a few months. The pattern is clear. When the crisis hits, gold moves first because it is the safe haven. But once the panic settles and people realize that the printing presses are never going to stop, silver takes off like a rocket. And in 2026, we are looking at a perfect storm. That could make those past moves look small. Here is what the mainstream media will never explain to you: the gold to silver ratio. Right now, as we move through 2025 and into 2026, the ratio is hovering around 85 to 1. That means it takes 85 ounces of silver to buy 1 ounce of gold. Historically, the ratio has averaged closer to 40 to 1, and during times of monetary stress, it has crashed to 15 or even 10 to 1. In simple terms, silver is historically cheap compared to gold. If the ratio simply returns to its historical average, silver would double in price from current levels. But if we see a true currency crisis, and all signs point to that happening sooner rather than later, silver could go up 5 or even 10 times from here. Now I know that sounds extreme, but let me walk you through the numbers so you understand why this is not just hype. The total above-ground gold is worth about $12 trillion. The total above-ground silver is worth only about $1.5 trillion. That is a massive difference, and when money starts fleeing from paper assets like bonds and cash, even a small percentage of that money flowing into silver would cause an explosion in price. We saw a preview of this in 2021 when the Wall Street bets crowd tried to squeeze the silver market. Within a week, silver jumped from $25 to $30, and that was just a handful of retail traders. Imagine what happens when central banks, sovereign wealth funds, and institutional investors all decide, at the same time, that they need real money. But let me be brutally honest with you. Gold and silver are not get-rich-quick schemes. They are wealth insurance, and like any insurance, you buy it hoping you never need it. But when you do need it, nothing else will do the job. The problem is that most people wait until the crisis is already here to buy. And by then, the price has already moved. The smart money, the people at Shadow Wealth, have been tracking for years. They buy when everyone else is distracted. They buy when the news is talking about stocks hitting all-time highs and real estate going to the moon, because they know that the best time to buy lifeboats is when the sun is still shining, and right now the sun is shining but the clouds are gathering. The bond market is flashing warning signs that we have not seen since 2008. The yield curve has been inverted for longer than ever before, and every single time that has happened, in the past, a recession followed. The difference this time is that governments have no ammunition left to fight a recession. Interest rates are already high, so they cannot cut much further. Debt is already astronomical, so they cannot spend their way out. And inflation, while it has come down from 9%, is still sticky and could easily flare up again if the dollar loses confidence. In fact, some of the most respected economists are now warning that the next crisis will not be a regular recession. It will be a currency crisis. And in a currency crisis, stocks can go to zero, bonds can default. Real estate can become impossible to sell, but gold and silver will still be accepted anywhere in the world. Let me give you a concrete example of how this plays out for your personal savings. Imagine you have $50,000 in a savings account earning 4% interest. After inflation, which is officially reported at 3% but realistically closer to 7 or 8%. When you account for real-world costs like food, energy, and housing, you are actually losing purchasing power every single day. Now imagine that same $50,000 converted into gold and silver. If the gold to silver ratio normalizes, your $50,000 could become $100,000. If we see a full-blown monetary crisis, it could become $250,000 or more. But here's the most important part that no one talks about. Even if the price never went up, just holding physical metals protects you from the silent thief of inflation. Your $50,000 in the bank might buy a car today, but in 5 years, it might only buy a motorcycle. Your gold and silver, on the other hand, will still buy the same amount of real goods and services, because their price rises along with inflation. That is what people mean when they say gold is a store of value. It does not make you rich overnight, it keeps you from becoming poor slowly. Now let me address the biggest objection that always comes up. People say, but gold and silver do not pay dividends. And that is true. They do not pay interest or dividends. But here's the question you need to ask yourself. Would you rather have a dividend that is paid in a currency that is losing value every year? Or would you rather have an asset that protects your purchasing power and can multiply when the system breaks? The other objection is that gold and silver are volatile, and yes, they can have sharp moves up and down, but compare that volatility to stocks. In 2008, the stock market dropped 50%. Gold dropped about 25% and recovered much faster. In 2020, stocks dropped 30% in a month. Gold dropped only about 10%. And silver, while more volatile, has always recovered and gone on to make new highs. The truth is that every asset has risk. Cash has the risk of inflation. Bonds have the risk of default and interest rate hikes. Real estate has the risk of a market crash and illiquidity. Stocks have the risk of a total systemic collapse. Gold and silver have the risk of price fluctuations, but they have zero counterparty risk. No one else's bad decisions can make your gold and silver worthless. That is a level of safety that no paper asset can offer. So as we look toward 2026, what should you actually do? Here is the strategy that Shadow Wealth recommends for anyone serious about protecting their savings. First, you need to have an emergency fund in cash. 3 to 6 months of expenses in a bank account that you can access immediately. This is your first line of defense. Second, you need to own physical gold and silver. Not ETFs, not mining stocks, not futures contracts. Physical metal that you can hold in your hand. Because if the system really breaks, the digital version of gold might not be accessible. Your bank might limit withdrawals. Your broker might freeze trading. But the 1-ounce gold coin in your safe is still yours and no one can take that away from you. Third, you need to decide on an allocation. Most experts recommend between 10 and 25% of your net worth in precious metals. If you are young and have time to recover from mistakes, you can lean toward silver for its higher upside. If you are closer to retirement and need stability, lean toward gold. A common approach is 70% gold and 30% silver. But as we get closer to 2026 and the signs of crisis become more obvious, many investors are flipping that to 70% silver and 30% gold because the upside potential in silver is simply too big to ignore. Let me also talk about timing, because this is where people get paralyzed by fear. No one can predict the exact top or bottom, but you do not need to be perfect. You just need to be in the game. If you buy gold at $2,000 and it goes to $1,800, that is a 10% drop. But if you keep holding, and history says it will eventually go to $3,000, $4,000, or higher, then that 10% drop is just noise. The same goes for silver. If you buy at $25 and it drops to $20, that feels painful. But if it eventually goes to $100, you will look back and wish you had bought more at $25. The key is to dollar cost average. Buy a little bit every month. Do not try to time the market. Just build your position over time. And most importantly, do not wait for the crisis to hit before you start. Because when the crisis hits, premiums on physical metals skyrocket. Delivery times stretch from days to months, and you will end up paying way more than you would have if you had bought ahead of time. I want to share a story that illustrates this perfectly. In the summer of 2019, before anyone had heard of COVID, gold was trading around $1,300 and silver around $15. A friend of mine asked me what he should do with his savings. He had about $40,000 in the bank, earning almost nothing. I told him to put at least half into physical gold and silver. He thought about it for months. He kept waiting for a better price. Then March 2020 happened. The markets crashed, the mints closed, and when he finally tried to buy, gold was at $1,700 and silver at $18. But he could not even find any inventory. The premiums had doubled. What would have cost him $20,000 a few months earlier now cost him over $30,000, and he had to wait 8 weeks to get delivery. Do not let that be you. The time to act is when the news is quiet. The time to act is now. Now let me talk about the specific factors that make 2026 such a critical year. The first is the debt ceiling. The United States government has been spending money like there is no tomorrow, and every few years they have to raise the debt ceiling to avoid default. In 2026, we are looking at another showdown that could make the previous ones look like child's play. The political climate is more divided than ever, and some factions are actually talking about letting the government default to force spending cuts. If that happens, the entire global financial system could seize up. The second factor is the BRICS nations. Brazil, Russia, India, China, South Africa, and several new members are actively working on a gold-backed currency to challenge the dollar. They are not just talking about it. They are buying gold at record rates and encouraging trade in local currencies. If the BRICS currency gains traction, demand for dollars will drop, inflation in the US will spike, and gold and silver will soar. The third factor is the commercial real estate crisis. Hundreds of billions of dollars in loans are coming due, and with higher interest rates and empty office buildings, many of those loans will default. That will hit regional banks hard, and we could see a cascade of bank failures worse than 2008. When banks fail, people lose confidence in the system, and they run to physical assets like gold and silver. The fourth factor is the energy transition. Governments around the world are pushing for solar power, electric vehicles, and grid-scale batteries. All of these require massive amounts of silver. A single solar panel contains about 20 grams of silver. An electric vehicle contains about 50 grams. And with the targets that have been set for 2030, we are going to need more silver than the world has ever produced in a single decade. Mining cannot ramp up overnight. It takes 5 to 10 years to discover a new deposit, get permits, build a mine, and start producing. So for the foreseeable future, supply is going to be constrained while demand is exploding. That is a recipe for much higher prices. The fifth factor is the most dangerous of all: central bank digital currencies, or CBDCs. Many governments are planning to launch digital currencies that would give them complete control over your money. They could limit how much you spend, where you spend it, and even impose negative interest rates that slowly drain your account. If that happens, physical gold and silver become not just a store of value, but a tool of financial freedom. They are the only assets that no government can freeze, track, or confiscate without your consent. That is not a conspiracy theory. That is the stated goal of many central bankers. They want to eliminate cash so they can control every transaction. And when that day comes, the people who own physical metals will be the only ones who still have true privacy and true wealth. So let me bring this back to the original question. Gold versus silver in 2026. Kaun ba chayega tumhari savings? The honest answer is both. But they serve different purposes. Gold is your anchor. It will hold its value when everything else is sinking. It will keep you sane when the markets are in chaos. It will ensure that no matter what happens to the dollar, you still have real wealth. Silver is your rocket. It will multiply your savings if you have the courage to hold on during the volatility. It will give you the upside that gold cannot provide. And because silver is both an industrial and monetary metal, it has two separate drivers pushing its price higher. The best strategy is to own both. But if you have to choose based on your personal situation, here is my advice. If you are primarily worried about preserving the wealth you already have, focus on gold. If you are willing to take on more risk for the chance to grow your wealth significantly, focus on silver. And if you want the optimal balance, go with a 60-40 split in favor of gold if you are conservative, or a 60-40 split in favor of silver if you are aggressive. But whatever you do, do nothing. Do not leave your savings in cash. Do not assume that stocks and bonds will protect you. Do not trust that the government will bail you out. Because when the next crisis hits, and it is coming sooner than most people think, the only question will be whether you prepared or not. Before I wrap this up, I want to ask you to do 3 things. First, if this video made you think differently about your savings, hit the like button. It helps more people find this information, and honestly, more people need to hear this. Second, leave a comment below. Tell me what you think about gold versus silver. Are you stacking one over the other? Do you have a different strategy? I read every comment, and the conversation in the comment section is where some of the best insights come from. And third, share this video with someone you care about. Your family, your friends, anyone who has savings that they cannot afford to lose. Because the mainstream media will never tell them this. The banks will never tell them this. Their financial advisor who gets paid to sell them stocks and bonds will never tell them this. But you can. You can be the one who helps them protect their future. This is Shadow Wealth, reminding you that real wealth is not printed on paper. It is forged in fire, minted in metal, and held in your own 2 hands. Stay smart, stay safe, and I will see you in the next one.